All right, so you're overweight the ringgit and the Korean won. Why?
Well, there's a number of reasons. One is I think we're still in a world at pretty low volatility, very low funding costs, so this desire for carry is still good. Korea gives you very strong fundamentals, still good positive carry with low volatility, so we like it. And the other thing that has actually supported Korean won to a certain extent is, if you look at renminbi for a while, especially offshore CNH, there's been this continued weakness going from mid-February till a couple of months later. But lately, the fixings have been a little bit more range-bound. We've had a bit of appreciation. A bit of weakness. So that kind of senses that maybe CNY is starting to top out.
Yeah, but the one itself, I mean, it's partially managed at the end of the day as well. I mean, what happens next to it is really what Seoul decides.
Well, I think if we still believe that U.S. recovery is still pretty much on track, and we continue to see pretty strong data, at the margin, I mean, Korea, I think, will still feel, at the margin, a little bit more comfortable of letting it move a little bit further. But I agree, I think there's a limit to how much more they will let it move, because obviously there are these concerns in competitiveness issues. But it's just really a short-term call at the moment that for now, I think it should hold pretty well supported.
And why the ringgit? I can understand the won because you have a persistent current account surplus for that country, but the ringgit?
Well, the reason why we like ringgit is that Malaysia's kind of a different cycle in Asia. This is a central country where we think the central bank is signaling pretty clearly that it's going to start hiking interest rates in July, while most countries in Asia are kind of on hold at the moment. So I think a more hawkish bias of the central bank on the back of concerns about persistently negative real rates, creating a lot of excessive risk-taking, and therefore the need to lean against the wind, I think continues to provide some support. And also Malaysia, by the way, I mean, even though it's had some current account adjustment, growth has actually been quite resilient as well. And Malaysia can also benefit from some net export recovery if we are right about the continued rebound in the U.S.
South Korea leaving rates on hold for the 13th month in a row. I mean, what will it do? What catalyst will be required to change either up or down?
Well, I think we need further signs that output gap continues to close at a more rapid pace. And if there are further signs of inflation pressures building up, then we think BOK will eventually adjust. We don't think that is a 2014 story. That could definitely be a 2015 story. So we expect they could start adjusting early 2015. At the moment, I think there's still a little bit of enough slack in the economy that I don't think there's any urgency for them to hike yet.
Any urgency in China for PBOC action? Any stimulus from Xi Jinping?
Right, so China's very interesting cycle. I mean, inflation, I don't think is a very big concern, notwithstanding a bit of rise of headline inflation. But we do think growth risk is really a bigger concern at the moment. And so we're already seeing a lot of gradual, policy easing, more calibrated policy easing coming out of China. And I think at the moment, I think PBOC is still holding back doing any broad-based easing because they're still concerned about financial imbalances. But I do think that if growth does continue to test sort of the 7% growth bound, inevitably there will be some broader easing.
Well, that's what everybody is saying, because, I mean, if you just take a look at the property market, where most people have their extra savings in a second home, perhaps, this is starting to erode. The prices are starting to drop.
Right. So there are definitely a lot of signs, I think, since a couple of months now, that a lot of indicators on property continue to look weak. So what they could do is we could still see selective policy easing. Lately, a lot of announcements have been geared towards SME and SME lending. Right. But it's possible we'll get a little bit more relaxation of lending to, say, mortgages, or maybe a little bit more social housing, which has already been announced. So a little bit of tacit here and there. But at some point, I think we could see a little bit more broader base.
How relevant to you is the World Bank report? I mean, it downgrades Chinese growth to 7.6%, which must be great news for the Chinese government because their target is 7.5%. So is it really relevant at all?
No, I mean, look, it's just another report that has come out. We forecast 7.
What's your reaction? Do you think whatever?
No, it's just another.
Or do you go, it's just another piece of data?
Look, I mean, the World Bank report is a lot of hard work by a lot of big group of economists, but it takes a while to build the report.
A bit of behind the curve.
But is it yawn-inducing?
No, well, I don't know if it's. I don't really think it's unless there's something new. We know China economy is slowing down.
Is there anything new in it?
I haven't looked at all the big report. It's a very thick report. But the headline doesn't seem anything new.
Which struck me was that they downgraded the US from 2.8 to 2.1%. Now, that was quite a slash.
Or India to 5.5.
Yeah, that was another one.
Well, actually, we downgraded already US last.
Remember they had a winter.
Yes. Well, you can see.
It was pretty bad.
Did they have a winter?
Yeah, they had a pretty bad winter. But it was pretty bad.
Yes, no, exactly. So this is backward-looking information. I think the most important thing is what it is going forward, right? And I think qualitatively, I don't think there's been anything, nothing new.
There are quite a few reports that have come from World Banks or other areas that seem to have this impact, but actually they're way behind the curve. I mean, there's not really... It's just slightly yawn-inducing. I haven't read the thick report, to be fair.
I haven't read it,
A lot of work goes into it.
Yes, absolutely.
The headlines that come out, China at 7.6%, I mean, I'm sure there's detail within that, but the headline...
Well, we're 7.3, so...
A bumpy start to the year. I mean, everything's bumpy, isn't it? I mean, it just seems...
I think we should focus on what's going on. I'm not going to focus on the World Bank report.
How bad is
harsh.
this property market, though, in China? I mean, are we really seeing the dangers coming from, the third and fourth tiered cities rather
the
than
credit risk
exactly? That's what we're trying to look at.
Look, I think we all know there's a lot of leverage, and a lot of property companies in China are quite levered. So the worry is really to what extent this continued slowdown and prices continuing to come off. You get a lot more cash flow pressures on these companies, and unless they get more access to funding, there could be credit risks that come about on the back of that. So that is the big concern. I'm not too worried about households being overly levered. I don't think that's the big issue. So the pressure is not really coming from, I think, households being distressed and having to sell property because they have negative equity. The issue is really if properties, if cash flow is tight, they keep slashing prices to move inventory, and of course that needs to happen. But if it keeps happening every day, then even households with good balance sheets will wait, sit out and wait. And there's always a risk of a vicious cycle where these things continue to unravel. So we do need timely policy response, and it's very tricky. We all talk about macroprudential policy tightening, but it's very tricky how to figure out when you're supposed to reverse the timing of macroprudential policies.